Three times in the past 4 years, Bitcoin has been rejected by a single on chain level, and every single time it consolidated for the next 2 to 3 months before making its next move higher. November 2022, rejected, consolidation until January. August 2024, rejection, consolidation until October. February 2025, rejected, consolidated until late April. It happened again right now, May 2026. If this pattern holds, and it has every single time over the past 4 years, we're probably going to see Bitcoin chop sideways until mid-July. The level in question is called the short-term holder realized price. It's the average cost basis of every Bitcoin buyer from the past 5 months. And the reason it works so well as resistance is pure human psychology. When traders who are underwater finally get back to break even, they sell almost every time. But here's what most people are completely missing right now. While short term holders are selling based on emotions, long term holders have quietly accumulated a record high 15 million Bitcoin. This tension tells us exactly what comes next after the consolidation. I'm Mitchell Askew, head analyst at Blockware, the leading Bitcoin mining firm in America, and I've spent my entire career at the intersection of Bitcoin, energy markets, and global finance. My goal today is to give you analysis that you can understand and take action on. A short term holder is anybody who's bought Bitcoin in the last 155 days. This cohort of investors is momentum driven and sentiment driven. They will buy on upswings and they will sell on downswings. They don't necessarily have a strong long term thesis one way or the other. They're just looking for an asset that they can get in and get out quickly and possibly make a return. The realized price is the average price at which they bought Bitcoin. It is their cost basis. It's not a technical indicator or a moving average. This is based on transparent, easily verifiable blockchain data across millions of Bitcoin transactions, different wallets, and different addresses. Bitcoin is unique from other assets because we have visibility into all of this data. It's a transparent ledger. We can see how much Bitcoin was moved at what time and at what price. For an example, if there's only one person left willing to sell Bitcoin at $80,000 and the next person isn't willing to sell it until it hits $90,000, you could see Bitcoin effectively gap up from 80K to 90K. That's why Bitcoin is so volatile, because the supply and demand dynamics can shift by a large margin in just a small amount of time. Like I mentioned before, this cohort is very emotional. They are driven by sentiment and momentum, and we get a glimpse into their psychology during bear and bull markets. During bear markets, they tend to sell when the price reaches their cost basis. They've been underwater and the price rebounds. They're back at break even. They're like, hey, I'm going to take my money and go home. I'm going to take my ball, go home. I'm done. Now, it works inversely during bull markets. This level serves as support. The price is trending higher. There's a dip down. It reaches their cost basis, and they see that as a value opportunity. So they swoop in and buy the dip, and that causes the price to move reflexively higher. And that's why this metric is so powerful. It's not a prediction tool. It is a behavioral fingerprint. These market participants leave their stain on the blockchain. So with that framework in mind, let's take a look at what the chart is actually showing us right now. So now that you have that context, let's take a look at the chart, and we're going to break down each of the prior instances where this dynamic played out one by one, and then we're going to take a look at where the chart's at today and what it's telling us. So if we zoom back all the way to November of 2022, and for those that don't remember, this was the last Bitcoin bear market. Bitcoin was down about 70% from its high. Interest rates were being jacked through the roof. FTX had blown up. The altcoin sphere had totally unraveled. There was contagion everywhere, a lot of forced sell pressure in the market, and Bitcoin was down as a result. You can see the Bitcoin price here in black. It was trading around $20,000. And the short-term holder realized price, you can see it had been trending down throughout the year. If we zoom back even further, yeah, it had been trending down. And we got this intersection here in November. And what did Bitcoin do? It dropped. It dropped from 20K down to about 16,000, where it consolidated for 2 more months before starting what was arguably the best bull market ever. Bitcoin was adopted by institutions. We had the ETFs. Bitcoin went up 100%, 2 years in a row. This was fantastic run from 2023 through the end of 2024. But what started it? It started with the short-term holder realized price being rejected, being resistance back in November of 2022. And we can see the next instance if we zoom out towards the summer of 2024. So up here, Bitcoin in August of 2024, we looked like we were getting a breakout, right? You can see here, Bitcoin, it was above it, support, then it dropped below, and then it turned into resistance again. It looked like it was going to break out, and then it did not. What did it do? It consolidated for a 2-month time frame. So from August until about October of 2024, Bitcoin chopped beneath the short-term holder cost basis before we got a massive run higher, right? Bitcoin went from about $50,000 to $100,000 during just a 3-month time span at the end of 2024. What started it? Same thing. Short-term holder realized price, that was resistance. We got that resistance, and then we had 2 months of consolidation, and then Bitcoin went to break on. And then we saw it not too much longer after during April of 2025. So Bitcoin dropped below it. We got this resistance test, failed breakout, and then we got 2 months of consolidation here back in March and April of 2025 before Bitcoin broke out. And then we moved to all-time highs shortly thereafter. And we're seeing the exact same setup today. So if we zoom in to 2026, we got this breakout. It looked like Bitcoin was going to break out of short-term holder over the short-term holder cost basis, but the breakouts failed. And what I would anticipate and what the data is telling us, and if we follow these historical trends, we're going to probably get about 2 more months of consolidation before Bitcoin breaks out and the next leg of the bull run begins. If you're tracking everything I'm saying so far, comment HODL down below. And if you're not tracking, then maybe this chart will provide a little more insights. So what we're looking at here is similar but different. We're looking at the short-term holder SOPR, or spent output profit ratio. And what this shows us is precisely whether or not this cohort of investors are moving their Bitcoin on chain at a loss or at a gain. Are they moving coin at a price below their cost basis or above their cost basis? And what you see historically is during bear markets, they're obviously moving coins at a loss. Bitcoin's trending down, they bought it, the price drops, they move those coins to capitulate, and that manifests itself in a SOPR below 1. So the profit ratio is below 1. In bull markets, you see the opposite, of course, right? You see all of these coins being moved at a profit rather than a loss. Now, what we've seen here as Bitcoin dropped below their cost basis, SOPR is back under 1. They are in the aggregate, this cohort of investors are moving their Bitcoin at a loss. And this is clear, it's subjective. They are preparing to capitulate again. They are already actively capitulating. Now, the question is, how many coins do they have left to sell? How much capitulation is possible? And what could this do to the Bitcoin price? How long could this be a supply overhang that keeps Bitcoin from breaking out above $80,000? That question is what our next chart is going to answer. But before we do that, I want to zoom out. I want to take a look at the bigger picture because price is set at the margin on the short term. And if we're thinking about what Bitcoin might do over the next 4 to 6 weeks, we want to observe short-term holder dynamics, but we're long-term investors, right? We're not in Bitcoin because we think it's going to be higher or lower 4 weeks from now. We're in Bitcoin because it is the most pristine asset in the world. It is the only asset with a verifiably finite supply that can be transported at your fingertips 24/7 with no third-party risk. Bitcoin exists beyond our current fiat system, which is broken in a myriad of ways. And so it's important to zoom out. And when we zoom out, we don't want to look at the short-term holders. We want to look at the long-term holders. The long-term holders dictate where the price is going to go over the next 6 months rather than the next 6 weeks. Okay, so this chart is the coin days destroyed chart. And you'll notice I don't even have the Bitcoin price plotted alongside this because quite frankly, it doesn't matter. We are zooming out. We want to see what the supply dynamic is at a macro level picture, right? We've seen it on the short term. The short term holders are capitulating the prices beneath their cost basis. That is supply overhang on a near term time horizon. But what's the bigger picture? This chart gives us a big clue. So, what is this green line? Because it looks like it's just kind of going up and down. It's difficult to make sense of this. Well, the coin days destroyed is one of my favorite on chain metrics. And what it tells us is this: on chain activity or transaction volume, but with weight given to coins that have been held for a longer period of time. So I won't bore you with the math, but basically, one Bitcoin being moved tomorrow that was bought today is one coin day destroyed, right? It was one Bitcoin, it was held for one day, and then it was sent. If you had 100 Bitcoin, you bought it today, you moved it on chain, and then you moved it on chain tomorrow, that would be 100 coin days. Or if you had one Bitcoin, you held it for 100 days, and then you moved it, that is also 100 coin days. So it's this metric that weighs both activity and duration, right? Because coins that were acquired 1,000 days ago or 5,000 days ago, they have a much lower cost basis than coins that were acquired 10 days ago or 20 days ago, right? And so activity is only one part of the equation. We want to know which cohort is actually being active. Because if it's the cohort we discussed earlier in the video, the short term holders, they bought Bitcoin in the last 5 months. We know they're reflexive. We can see the psychology on chain. They sell at their cost basis during downtrends. They buy at their cost basis during uptrends. But the other cohort, and quite frankly, the one we're more concerned with over the long term, are those hardcore Bitcoiners that buy and hold for years. And it doesn't even have to be the laser-eyed maxi that reads the Bitcoin standard and has 5 different cold cards, right? It could just be the average tech forward investor or lawyer or entrepreneur that is generally Bitcoin appreciative. They're not religious about it. They just like to buy and hold quality assets, of which Bitcoin is one. This metric gives us a glimpse into both of these cohorts. So anybody who's approaching Bitcoin with a long time horizon, they're buying and holding for years rather than weeks. So hopefully that's helpful context as we examine this metric as a whole. But now we can look at sort of individual components and examine where we currently are today. So Coindays Destroyed, like I said, has these two factors, and the rope's being pulled in a couple different directions, right? Because you have activity, but you also have the duration of how long those coins were held. So when we think about a spike in Coindays Destroyed, it can happen for a couple of reasons, right? We've got multiple periods in which this metric absolutely skyrockets. This can happen for two reasons. One, you can have a large capitulatory type event. A bunch of Bitcoin is being moved all at once. That's going to cause Coindays Destroyed to spike. And that's really kind of what you see here in recent times, right? You had this large spike on a couple different instances. That tells us a lot of Bitcoin was being moved all at once. Versus if you kind of zoom in here on 2017, this was when Bitcoin had this year-long bull market. It went up over 1,000% in a year. You get Coindays Destroyed going up, but it's much more gradual, right? It's not like this immediate jerk higher. It's prolonged over a couple of months. And what this tells us is older coins were selling into that strength, right? Because it's not one moment with a rapid spike and then it kind of crashes back down. It is this gradual, prolonged increase over multiple months. So this raise in the Coindays Destroyed is really driven primarily by the old coins, by the days part of the equation rather than the coins part of the equation, right? Older coins have more weight than newer coins. Coins that have been held for a long period of time have more weight than coins that were bought within the past 5 months. So, where does that leave us today? Well, Coindays Destroyed is at a multi year low. It hasn't been this low since the start of 2024. And this tells us two things are true. One, there's not that much Bitcoin being moved on the blockchain right now. Activity is low. And it also tells us that activity is low, particularly among coins that have been held for a long period of time. So, not that much Bitcoin is being moved, and the coins that are being moved are not being moved by the people that have been in the market the longest. So if you look at what the other side of that is, it means the coins that are being moved, it's that reflexive, emotionally driven cohort that we were speaking of earlier. The ones who are going to sell at their cost basis, and they're not heads down accumulating Bitcoin and holding for a long period of time. So the implication here, price is going to be a little more reflexive to the short-term holders in the short term, but over the long term, we're seeing conviction. We can see it on chain. Investors that have been in the market for a long time are not selling at this moment. They're not capitulating. You saw that capitulation earlier this year or at the end of 2025, right? When you get this immediate short duration spike higher and coin days destroyed, that's a lot of Bitcoin, some of which has been held for a while, being moved all at once. It's no surprise that that caused Bitcoin to drop from around $120,000 down to $80,000 and ultimately down to $60,000, although that was for just a brief period in time. We had the capitulation. Now the dust has settled. The only capitulators left are the short term holders that weren't ever really convicted for the long term, anyways. Now, our fifth and final chart brings this all together. It's the final piece of the puzzle that helps us make sense of everything we've discussed so far. And it's the long term holder supply. How much Bitcoin is held not by the reflexive, momentum, and sentiment driven cohort of investors, but by the convicted long term accumulators? Well, it's a record high, almost 15 million Bitcoin. That's what this orange line shows us. Nearly 15 million Bitcoin have been held for at least 5 months or longer. We broke the record, which was set during 2025, where it peaked over 14.7 ish million. When Bitcoin bottomed back in February, we saw this drop off in the long term holder supply. So you can see here, it started to taper off. That was capitulation. That were people that had bought Bitcoin at least 5 months prior, selling because the price started to drop and there was a lot of uncertainty in the broader economy. But we've seen the tables turn. We've seen aggressive accumulation over the past few months. Now, what does this mean? And we can look historically and zoom out to kind of answer that question. But you should know, based on all the context of this video, that the supply being aggregated into wallets that typically don't sell their Bitcoin means we're going to, at some point, get a supply squeeze. That might not be next week, it might not be next month, but at some point over the next year, we're going to get a supply squeeze, right? Price is set at the margin. So short term holders capitulating in the near term can cause price to crash. But over the long term, more and more supply is being stacked relentlessly by long term holders, those that aren't going to sell when Bitcoin hits $80,000. They might not sell when Bitcoin hits 90. They might not sell when Bitcoin hits 100. We don't know at what price they're going to sell, but we know it's not the current prices because they are aggressively accumulating. And what made the last Bitcoin bull market very interesting is we saw aggressive accumulation really the entire way up, right? Bitcoin bottomed again in November of 2022 at around $16,000. And we started to see aggressive accumulation in the months leading up to that. But even as the price recovered, right? You can see here Bitcoin went from 16 to 20. It chopped around in the 20s. Then it went from 20 to 30, 30 to 40. And it wasn't until Bitcoin went all the way back to its previous all-time high of around $60,000 or 65, $70,000. That was when we saw long-term holders really start to sell into that strength during that push to new highs. But the entire time Bitcoin went higher in 2023 and most of 2024, um, but the entire time Bitcoin went higher in 2023, we did not see long-term holders selling into that strength. They just kept accumulating. They kept stacking sats. So it leads me to believe that we're likely going to see similar, if not even more aggressive accumulation during Bitcoin's next move higher. So from the current price of around $74,000 until Bitcoin's back at all-time highs of around 125, we'll probably see continued accumulation. And what does that do? Well, it sets the foundation for even more price appreciation. Again, we don't have a crystal ball. We can't say for certain when this supply squeeze will happen, but we know it's coming. Bitcoin has a finite supply. There's only 21 million coins, and there's an infinite supply of fiat currency. Bitcoin's only scratched the surface of its total addressable market. If this kind of on chain breakdown was useful for you, make sure to smash the like button, leave a comment down below, and subscribe to my newsletter. I send a newsletter every week to more than 100,000 subscribers where I break down this on chain data, but I give you even bigger of a picture. We look at global finance, we look at Bitcoin on chain data, Bitcoin mining. We try to take an all encompassing view of the market, and I break it down in as much detail as possible while also trying to keep it simple so that every person can understand and take action.